Good evening, everyone. Welcome to this meeting of the Shareholder Committee. We have a few items on the agenda this evening, and in order to make the meeting run more simply, I intend to take item 8 before item 7, so that we can release everyone from their items before we go into a private session. I will move swiftly on with our agenda. We don't have any apologies. Everyone is here, either in person or virtually. So I'll move on to declarations of interest. Can I see if there's anyone who has any declarations of interest? No, marvellous. Then we go on to the minutes of the meeting on the 19th of March. Everyone happy for me to sign those minutes? Great. And item 3, exclusion of the press and public. Agenda item number 7 has an exempt annex. So I'm asking for your agreement to exclude press and public from the discussion of the exempt annex A of agenda item 7. In agreement? Yeah. Yep. So we will, as I say, we will take item 8 before item 7, move into item 7, and then we can release everybody who's not needed for the exempt portion. Our next item is item number 4, public participation. We have one public speaker, Gwen Swinburne. Good afternoon, Gwen. I know you know that you've got 3 minutes. Yes. And you usually prefer not to have a warning.
Thank you.
Okay,
thank you, Chair.
Off you go.
Members may know that this committee was founded in 2017 as a direct result of the governance and management failures so dramatically exposed in our first public interest report. The disparate officers have never treated the council own. Oh, thank you. The disparate officers have never treated the council-owned businesses equally. Over time, the initial governance checks and balances focus has been lost. I am asking that you return to first principles, which were an early report from each business asking for member approval of their draft business plans, a mid-year catch-up and an end-of-year outturn. All businesses should be required to provide a similar level of information, both public and private information. This is not the case now. We also get no reports on YPO, nor the Municipal Bond Agency reported, yet we are shareholders in both. Chair, all covering reports to this committee should be written by accountable City of York Council staff, with only appendices and presentations by the companies. The Director of Governance, accountable officer, hasn't bothered writing a covering report on the minimalist Veritau report. Similarly, Ms. Whiting has not written a report on City of York trading, both abdicating to the businesses. As City of York Council reduces spend on temps, we need to watch City of York trading closely as we are liable for their failure. Employees not writing papers must be stopped, Chair. The level of detail in public and private should be equally rigorous for each company. I observed a particularly well-written report on Make It York last time, with multiple detailed annexes being listed, some public, some private. So we citizens can have some confidence you are being provided with detailed finance and performance material. This is not the case in the reports you see today. Nor is there much explanation on several governance changes and the establishment of rationale of extra-tecal companies. It seems quite opaque. Finally, we know that multiple councils are in trouble because of lack of oversight of such businesses. May I ask, after 6 years, you or ANG initiate a governance review of the role and efficacy of this shareholder committee, including a need for common standards, transparency and independent persons, and that a full reporting standards template be designed so all businesses have the similar requirements, whomever their manager is. Thank you, Chair. I'll send you the details.
Thank you very much, Gwen. Much appreciated. and we'll certainly take those comments on board. Just want to point out there is an officer report by Helen Whiting for City of York Trading on pages 19 and 20 of the report pack. No, it's quite all right. No, I just didn't want us to have any confusion. Thank you. Okay, we'll move on then to our next item, which is the Yorwaste finance update. Sandy.
Thank you. I normally start off with the standard boilerplate, which I think we've been through in every meeting that we had. I think it's important to have that in there, but if there's any questions on that, I'm quite happy to answer that. If anyone's got any questions, because it's not all just about our profits, it's about the cost that we have to the authority, it's about the indirect value we do with Allerton Park, and also in the development strategy and support for the councils and their operations. In terms of the outturn, we've completed the annual reports, but they've not been signed with the auditors as yet. We've got a board this week. The board will approve those subject to some final comments from the auditors. One would hope. We don't have any contentious issues this year. We came in, as we've discussed in previous meetings, slightly ahead of last year, which was another good performance. That's been helped once again by the landfill gas. So whilst we've been struggling with electricity prices, that's been offset a lot by the electricity prices that we get for selling the electricity to the grid from the landfill gas. So on that basis, that's been quite a good year. But let's start off with the risk and compliance. I think the best thing about last year from a personal perspective is the fact that we didn't have any RIDDORs. That's the first time in the entire history of Yorwaste it's had no RIDDORs. It had a 50% reduction in the lost time injuries. Our LTIF, our lost time incidence frequency rate, was also sort of significantly down on the prior year. We accredited the 45,001. We've had another ROSPA Gold Award. We maintain our green status for Oakers, which is all about our operating of our transport fleet. And we've had no enforcement notices from the Environment Agency, despite the fact that the Environment Agency is becoming a lot more rigorous. They've gone from being sort of pragmatic to being quite dogmatic now. Make a value judgment about that. Ultimately, they're paid to do the job, but they've upped their game in terms of looking for dotting I's, crossing T's, and almost metaphorically walking about with a white set of gloves. That's not a problem. We need to respond to that, and we've been doing that as well in terms of upping our sort of response to that. Financial performance, turnover's gone up by 10.8%. A lot of that is on the back of inflation from the prior years, but the authorities' costs didn't go up by inflation. They were up by less than inflation. We obviously had more revenue coming from the landfill gas, which also took it up. That was above inflation. And then we had certain above inflation increases in other areas. Operating costs, we kept our core operating costs below inflation, but our disposal costs at Allerton Park were above inflation. So those two sort of netted off. Overall, that's why we ended up with profit before tax and interest being slightly high. Interest, as you know, over this past year has been a bit higher, and despite the fact we've been paying down our debt for the, like we did last year, the interest rate still offset that. So all in all, we still came off slightly higher than we were in the prior year, and that's primarily landfill gas revenues and third-party recycling. Cash is strong. We've got good cash in the balance sheet, so we're not going to need to come and asking you for cash for the foreseeable future, and that will fund some investments that we're looking at specifically for Yorwaste, which includes trying to make Yorwaste net zero on our electricity by 2030. So if and when the planning permission comes through for Harewood, we will then look to take a small portion of that for Yorwaste use, and then the rest is for the council to develop as part of its plan that it's got on the wider one. That then allows Yorwaste to be net zero on its electricity, hopefully by next summer. And if we get to that stage, that ties in with the fact that we've had some protection on our electricity contracts that expires next summer. So it will mitigate some of that potential increase in our electricity costs at that point. We're also looking at potential opportunities to consolidate our composting operations, which would allow us to be more efficient in that and reduce our carbon footprint. Part of the challenge with doing that, though, is finding a site that allows us to sort of do that. So we're exploring that, and we've got some cash earmarked for doing that if we can find a suitable site. Aftercare liabilities is always one of the ones that we talk about every year. Previous years, we've had some concerns, so we've been building that pot up a little bit every year. We've been saving for the rainy day. We had our independent external validation, the first one in 7 years this year. I was just recently finished, and that concluded that we had sufficient contingency on the balance sheet to meet those obligations, independently verified. We believe at this moment of time the auditors are happy with that as well. So we're not facing a hole in that provision that we might have been sort of a little bit more reticent with. We've managed to sort of mitigate that. And then, as I sort of said, with Dalton Park, full target price for volume. So that's maximised the shareholders' investment in that area. In terms of current trading, landfill gas dropped significantly at the start of the fiscal year in terms of both the rate that we had secured, and the volume is also starting to tail off, as it is with the decay of the landfill. So it decays, so to speak. So that's going to continue to go. That is a significant hit. That's about £1.5 million. Yeah. So you can sort of see that's a big issue that we're going to have to mitigate. We have been continuing to grow our commercial business, which will provide some offset, and we've had some really positive green shoots of new growth in the first calendar quarter of this year, and it seems to be sort of edging itself into that was above where we expected to start the year. So if we're able to maintain that, that will be an upside for the rest of the year. We've also managed to retain at the moment our uncontracted third-party recycling, which will also help benefit and mitigate some of that impact. But because of that drop in the landfill gas rate specifically, and volume to a lesser extent, I don't see at this point how we can come in at the same level for last fiscal year. But we will continue to endeavour to do so. And the other sort of key points we've got here in terms of what we are looking forward, the simpler recycling strategy, I think we're going to have a different government very soon, so we're not quite sure. We think, I don't know, there is an election which may result in a different government. I'm not quite sure what I'm allowed to say. I'm not empowered or something like that. Right, but there may or may not be a different government in the not too distant future, which may or may not impact the simpler recycling strategy, which then has a big impact for us all. And within that, we've got a number of options. All of them are oven ready to go. And it's a question of how we respond to that. A lot of that is just about tweaking our existing resources to meet that. There's nothing that we see at this moment in time that will require a massive increase in investment for us. But if the authorities change what they're looking for, then we will need to change accordingly. And then we've talked about the solar farm. I was rather disappointed that it's still not gone through planning, and they've come up with a few last minute questions, a fairly 11th hour, but we will deal with those, and we will answer those, and then hopefully when it goes through, it will come out with a positive outcome. And that's really it, I think. So unless there's any questions.
Thanks, Andy. Questions? Councillor Douglas?
And on Harewood Win and the solar farm, how are you getting on with your interactions with Northern Power Grid and
so I think there's everyone's aware of the issues with Northern Power Grid, and to date I believe that Sean and his team have been talking to members of Northern Power Grid, and there's this talk of the amnesty and it freeing up capacity. I'm perhaps a little bit less optimistic about that. I think you could still be looking at a 2034, 2035 connection date. There are options that we're exploring with the on-site facilities that might allow you to access some of the grid at an earlier point with some existing infrastructure. That will be dependent on a whole host of things in terms of our contracts that we've got for the current landfill gas operators. But I'm not aware of anything that brings that date forward significantly from 2034 for the wider 28 megawatts.
So at this point in time, then it means that you would be internally able to use any electricity that's produced for your own needs, but feeding into the grid will continue to be a challenge.
We use around about 1.25 megawatts across our estate. We'll have installed within some of our buildings by the end of the summer about 1/4 of a megawatt, which leaves us with about 1 megawatt that we need to do in round numbers. Don't quote me on these. The existing Yorwaste inbound MPANs, grid points, would be able to facilitate that. So we would be able to set it up whereby we would use what we've got on site, export the excess, and then when we're not using it on site, we'll be able to export it. So that's what we're currently planning to explore. It wouldn't require hefty, be a bit like setting it up in your house. They just use your inbound electricity point to export it. Similar sort of thing, just using the existing infrastructure that's there. So if we can get the solar approval to get the solar panels out, we can then apply to Northern Power Grid to get the connection to do that, to allow us to export and effectively become, as a group, self-sufficient in electricity.
Great, thank
over
you.
the year.
Thanks.
Councillor Ware.
I'm not sure if you can answer this or not, Sandy. Is that impacting on both sites? Are both sites the same situation? Because there's a commercial one got approval adjacent to where this one would be.
So I think he's okay. Now you're talking about Solar 2, which is the commercial site, which is to the northwest of Harewood, the one that's already currently got completely separate from us.
Yeah, I just wondered if you'd had been any conversations if they were facing the same challenges or.
I believe they already had their grid connection agreed prior to them putting in the planning application. So there is some rather interesting things whereby you've got a chicken and the egg about grid connections and planning that I don't fully understand and doesn't make a huge amount of sense to me, but that would be an ecumenical matter for government to deal with at a later date.
Thanks, Sandy. Any other questions? No? Then we are asked to note the report. Happy to note it, Claire. Councillor Douglas, wonderful. Thank you very much. That's that item complete.
And just to remind you, we will put in the annual accounts with the next one once they've been approved by both the board and the AGM. So I think that'll take place for the next shareholder committee. So
Lovely, thank you.
Yeah.
So we move on then to Veritau.
thank you very much.
Max, go ahead.
Okay, thank you, Chair. So like Sandy in Yorwaste, we deliver shareholder value in a number of ways, not just profit, but we've summarised some of the items in paragraph 4. Since the last meeting of the shareholder committee in March, most of our efforts have been tied up with establishing the new company, Veritau Public Sector Limited. Having said that, we are still trying to promote the business, and we have gained a number of new clients. So those are, I've put some of the main ones in paragraph 5, but those include Bradford Children Families Trust and a few other organisations. We've also successfully been added to the YPO framework for internal audit and account fraud services. So in terms of last year's financial results, the audit is still ongoing, an audit of the accounts. It is, I think, practically completed. I'm not aware of any significant issues that have been identified, so I expect those figures will be pretty much as they're presented, but they are still draft at the moment. But what they do show is that we have we expect to make a profit for the year. That profit is in excess of the budget and also the previous year, so quite a good result for us. I've also shared details of the annual client and staff satisfaction surveys. We send out 2 client surveys, one to all our school DPO clients, so nearly 700 surveys go out with that, and another survey to all our other clients, and the sort of headline scores are very good. We've made sort of improvements on last year. Having said that, the response rate is really quite low, so I'm not sure you can draw a lot of conclusions from it. What I think we perhaps put more emphasis on is our client retention rate, and that remains very strong. So we retain over 99% of our clients have continued with the service into this current year. In terms of staff satisfaction, again, the results are remain quite strong. We've shown a small improvement on last year, but overall, I think we are quite pleased with those results, and no significant issues came out of the survey. So happy to take any questions on the report.
Thanks, Max. Any questions for Max? Councillor Douglas?
Thanks, Max. And so performance is looking pretty good, isn't it? I'm sure you must be reasonably content with where the company's at the moment. And just looking at that client satisfaction survey, it's a shame that it's so low, isn't it? Because you do really well on them, and it's a bit hard to interpret, as you said, but it does look like, rather than the majority being excellent, now the majority are good. Is there anything that you've identified that means there's been that shift? It's hard to maintain excellent forever, isn't it? But is there anything that you've
I don't think so. I think, to be fair, I think we get only a handful of responses, and you only need that mix to change slightly from year to year for the scores to change. As I say, I think the overall trend remains good. So people are either scoring us as excellent or good, and we're happy with that. And if we keep them, that tends to be what we really value.
Yeah, thank you.
Any other questions? No? Marvellous. Short and sweet. Thank you very much, Max. We'll move now to item 8. So going slightly out of order. But item 8 is the work plan for 24-25. Any questions, comments on the work plan? Couldn't see anything missing. So in that case, we'll note the work plan for the coming year. And then we will move to item 7. So we'll first look at the excuse me, wait for me 1 second while I get my right page. So we'll first look at the report, and then we'll go into a private session to look at the confidential annex, if that's okay with everyone. Karen, I'll hand over to you.
Thank you. As with the 2 previous companies, our audit is ongoing, and we don't have any final accounts so far. We're not expecting any surprises, though. The auditors came in a couple of weeks ago, and they're aiming to conclude their investigations and report in the next couple of weeks. We're expecting the board to approve the accounts at the end of July, so we should be in good time for the next meeting. In terms of shareholder value, we're in there again with the other companies. It's providing staff to the council, both temporary staff, and also we've been assisting with some of the harder to fill permanent roles successfully over the last couple of months or so. Most of the other information that I can talk about is in the confidential report, I'm afraid.
I will just check at this point if there are any questions on that public information that is in the cover report. And there aren't, so in that case, then we'll move into a private session. I shall thank our public speaker and anyone who's watching online, and let you go and enjoy the rest of your sunny evening. Oh, thanks. We're not coming.